Although Tesla stock has been through some rough days, experts and analysts have assured us that better days are indeed ahead. With a solid number of bullish catalysts still in sight, and some still in the works, we have reasons to believe that Tesla stock will skyrocket 200% in the coming days. In today's video, we'll be taking a close look at these bullish catalysts, the applicable implications of their impact on the stock, and when they could make Tesla's stock price skyrocket, so be sure to keep watching. Tesla Incorporated stock, which reached $1 trillion valuation earlier this year, has seen a reversal of sorts in 2022, despite a broader market sell-off in tech equities. Even a spectacular earnings report and record profits were not enough to turn the company's fortunes around, with the stock dropping more than 11% after the call and declining even further since then. According to company's market cap, the Austin, Texas-based firm has a market capitalization of $832 billion, making it the world's sixth largest company and the most valuable automobile manufacturer as of March 7th. Despite the company being on track to meet its goals and navigating the hurdles thrown their way, the stock had only risen by a small percentage before it went back towards the negatives again. There could be a variety of reasons for this. The shadow created by events in Ukraine and the introduction of sanctions on Russia is surely contributing to this downturn. A gloomy cloud is also looming over high-tech companies in general, and the electric vehicle industry in particular. There's also the fear of investors driving them to sell off shares on the basis that legacy original equipment manufacturers may catch up to Tesla and even get ahead of the Pioneer brand. Seth Goldstein, senior equities market analyst at Morningstar, commented on this, saying, "We believe some of the sell-off has been attributable to the market readjusting its long-term expectations for the company amid increased competition." He also mentioned that the stock price dropped after Tesla CEO Elon Musk tweeted in November that he might sell more shares after selling nearly $7 billion in Tesla stock recently. Following the poll, the billionaire sold 10.1 million shares of Tesla, worth $10.86 billion. His firm remained unmoved, unlike several investors, and stuck to their target price. Goldstein added that, "We do not believe that management's likely move to sell stock should cause us to revise our Tesla prediction. However, several Tesla-specific difficulties may be driving market unrest. Elon Musk, the company's CEO, is embroiled in a long-running and increasingly acrimonious fight with the Securities and Exchange Commission over a 2018 agreement on how he uses social media. The company's production factory in Germany had yet to open. The opening date has been postponed multiple times, despite promises from the brand. The factory is seen as critical to Tesla's European ambitions and eventually company expansion. According to Reuters, the production of its proposed electric pickup truck has been delayed until at least the first quarter of 2023. It was originally scheduled for late 2022, but has now been pushed back at least until the first quarter of 2023. All we've mentioned so far are negative factors, so why do we believe this stock will skyrocket in the coming days? By 200% at that. Well, it's because the company is experiencing a turnaround on several fronts. Let's start with the events in Ukraine. Contrary to the initial panic, investors are starting to understand that the Russian sanctions are bound to have a positive effect on the electric vehicle industry as a whole, and with Tesla being at the forefront of this evolution. The only way is up. Russia is one of the major exporters of oil. In their bid to boycott the country, many countries will look for an alternative option, electric and solar power, the exact need that Tesla addresses. We don't need to tell you that this will positively affect the stock's valuation. Experts seem to agree, stating that the company might potentially gain from any hikes in gasoline prices or government controls on more traditional internal combustion engine automobiles in the coming few years. The next factor is, what about legacy original equipment manufacturers? Some say they're already ahead and will secure a sizable share of the market. We believe this is grossly untrue. Tesla is the market leader in electric vehicle sales in the United States. Even though China and the United States are two of Tesla's most important markets, the company delivered over 936,000 cars worldwide in 2021 and are rumored to be already on their way to surpassing their deliveries from the last quarter. Meanwhile, most legacy original equipment manufacturers can't catch up and are currently struggling with nailing their technological aspects. Tesla's great trajectory for its battery technology, capacity, and notably affordability, according to a Deutsche Bank analyst, will continue to hasten the world's migration to electric vehicles and extend Tesla's lead considerably. design advancements, more efficient factories, complete production ramp, better material procurement, localized supply chain, and labor hour reductions. According to Rossner, the analyst added, electric vehicle competitors haven't even started this effort. We definitely agree and believe the more people start to realize this, there will be a shift in the market sentiment which will cause Tesla's stock price to skyrocket. Addressing the internal issues, based on history and statistics, Elon Musk's shenanigans hardly seem to affect the stock price. Tesla faced a slew of discrimination lawsuits, recalls, and social media posts showing its latest self-driving software aiming a vehicle at a cyclist, but that didn't seem to bother the company's ardent supporters. The Berlin Gigafactory is an entirely different matter though. It caused many investors to lose faith in the brand's performance this year, especially after the announcement that the Cybertruck release date was postponed. However, the Berlin Gigafactory is now operational, which could signal a future stock price increase. Tesla has finally started work on the project, which will comprise of a battery factory with a capacity of more than 50 gigawatt-hours per year, far above that of European competitors. While on-site car batteries will initially be sourced from China, Musk claims that volume production at the German battery plant will begin by the end of next year. This means more car sales and more profit, as the electric vehicle brand prepares to capture a good portion of the European market currently dominated by Volkswagen. On the Cybertruck front, Musk stated that he hopes to create 250,000 Cybertrucks each year, but that this will take time due to an influx of new technologies. It's unlikely that batteries would be the limiting constant in Cybertruck manufacturing, he stated. With their partnership with Panasonic currently flourishing, this doesn't look likely to us either. He brought up the issue of affordability though, saying, "I'm more concerned about how we're going to make the Cybertruck affordable, despite the fact that it has amazing technology." It also seems Tesla's Cybertruck manufacturing has been delayed because the company is altering features and functionalities in response to increased competition in the electric pickup market. We think this is a good response, as this will help the brand stand out and possibly carve its niche into the electric pickup market. To our understanding, we've tackled every factor that was possibly causing a decline in Tesla's stock price and show that a turnaround is due any minute now. Do analysts agree with us? Analysts seem to be split on the stock price. While some believe the company will continue to grow, others believe it's overvalued. According to Credit Suisse's Levy, with less uncertainty about demand and considerably more uncertainty about EV supply, Tesla should be a big winner. It has a product lead over the competition and has adopted the most comprehensive strategy to EV supply. Tesla not only avoids the challenges that legacy original equipment manufacturers face, margin dilution, manufacturing transition, and distribution, but it also has a competitive advantage in supply/vertical integration, software, product simplicity, and capital availability. He believes the brand will continue to grow. Deloitte researchers agree with him, stating, "Our global EV forecast is for a compound annual growth rate of 29% attained over the next 10 years. They believe total electric vehicle sales are expected to rise from 2.5 million in 2020 to 11.2 million in 2025, and then to 31.1 million by 2030. Quote, electric vehicles would account for 32% of total new car sales. Wallet Investors' algorithmic forecasting is quite optimistic about the company's prospects, foreseeing accelerated growth soon. It claims the stock is an amazing long-term one-year investment with a price target of $1,270 in the next year, while the Tesla stock price might reach $2,948 in 5 years, according to the company's 5-year prediction, supporting our belief that the stock will skyrocket in the coming days. In this fast-growing market, Tesla already has an excellent position. The Model S, Model 3, Model X, and Model Y models are not only technologically advanced, but also visually beautiful, which is why there are so many more on the road. The company has an agile and innovative nature, which makes us believe that it will continue to remain on top no matter the circumstances. There is no doubt that persistence coupled with value provision is key to success, and led by the visionary that is Elon Musk, we foresee great things to come. Do you think Tesla stock will skyrocket soon? What percentage of growth do you predict? Comment down below.